You are listening to ChartingWealth.com for Friday, the 28th of October, 2016. Markets down another 0.37% following our long-term trend line on the weekly and the two-day chart. We told you to watch for this. We have a red down candle that finished forming on the 27th. That reflects 2 days of down movement. We are down well below both the weekly and the two-day trend line. We've got a little bit of a tail on that bottom candle. If you don't know what candlesticks are all about, we got a great training on Heikin Ashi, means average pace in Japanese, on average pace candlesticks. Look up Heikin Ashi at our website, chartingwealth.com, or at our YouTube channel. You can also find all those trainings there under Charting Wealth. So we've had the market going down since, on the two-day chart, since the 24th of August, and it continues to move down. Now, if we look at our two-day chart, from our two-day chart to our half-day or 4-hour chart, we had a crossover in the morning. We told you yesterday to watch for that. Your entry point was in the morning. Hopefully you jumped into that. Some of you jumped in earlier after we had that first rollover down move with a red down candle back on the 25th. And we've had substantial down movement since then, along with substantial down movement in the afternoon. We have this crossover. We had a pullback going in the opposite direction of the big charts. That was an up movement because the big charts were down, like I just said. When this crossover occurred, that is your safest entry point. Is it totally safe? Nothing is. The markets will do what the markets will do, but we are intelligently trend following. We wait for the markets to roll over in one direction or the other, roll over, roll up, and then we wait for a pullback on our short chart, as we saw starting on the 18th of October. We waited for that rollback, which was the opposite direction of the down move on the big charts. We waited for that rollback to end, and that is your jumping in point, your safest jumping in point. So that is where we are. And you might say, for those of you who are just getting into trying to read charts and understand how the stock market works, IYY is an exchange traded fund that tracks the total market. Now, there are funds that actually go up when the market goes down. Those are called inverse funds. That's how you can make money when the market goes down. Another training to listen to at our website is inverse funds, how to make money when markets crash. That's another great one to listen to. You can also find that at our YouTube channel. We're all about learning to read these charts and figure out which way they are going, not listening to the news and the talking heads. They many times will lead you astray. As they say on Wall Street, you buy on the rumor, sell on the news. Well, by the time you hear it on the news, it's gone, baby. What do? We pay attention to what's going on these charts. So we're going to go from the two-day chart on the total market to the two-day chart on the S&P 500 as represented by SPY. It was down 0.27% for the day. We have a red down candle. It has a wick on top and bottom, meaning that there was up movement and down movement. We are continuing since the 24th, like the total market. We've seen the S&P 500, the 24th of August, move down. It's had substantial drops at a couple of points, and it's rolled back over for us. If we look at the 4-hour chart, we see that there was a crossover in the afternoon, not in the morning, but in the afternoon. Hopefully you jumped in at the appropriate time, and now we will see if indeed that continues to move down. Do we know that that's going to happen for sure? No, we don't. But the odds are with us that now the short chart is moving in the direction of the two bigger charts, the 2-day and the 4-hour. And again, if you're looking for a potential inverse fund that tracks the S&P 500, SH is one. Sierra Hotel, SH. Check that one out. It actually moves up as the market moves down. It's the ProShares short of the S&P 500. It moved up this afternoon as the S&P 500 moved down. That's the way you do something sophisticated. Now, again, we always give this cautionary note. We are not a stock calling service. We're an education firm. We're talking about you going in and buying virtual shares, learning how this works, practicing. Once you get good, you can make up your own mind. We want you to learn some of our methods. You can put in what you learn as you go along the way. We want you to find a simple method where you can consistently figure out what these charts are doing, how to track them. And once you get good in your own way at trading these things, buying and selling, then and only then can you make up your own mind. We are not a stock calling service. We're an education firm. We don't advise you to buy anything. We're talking about virtual trades here. You don't pay us a dime, and we are not giving that kind of advice at all. Okay, enough said. Let's go now from the S&P 500 to the Qs. The Qs was down the most, 0.46% for the day. It too crossed over in the afternoon. Hopefully you were looking for that. We talked about it yesterday. QID is an inverse fund that actually moves at a double inverse. It's the ultra short of the Qs. Now again, the Qs is the Nasdaq 100. It has been going up as the Nasdaq 100 has been going down. Now let's look. We did cross over. We have a big move in the derivative oscillator, and our PPO, our MACD, crossed over going down. So everything now on the Qs is going down. The weekly, the 2-day, and the 4-hour chart. If you remember, the weekly gave us forewarning all the way back earlier. It actually crossed over going down last Friday. Whoa, how did that happen? Well, again, the PPO, and the PPO again is the percentage price oscillator. It's the same as the MACD. It moves in percentages rather than in dollars as the MACD does. Had one of our followers recommend that we change over to this, and we have recently. So we've got new charts available. If you subscribe to the channel, if you go to chartingwealth.com, sign up and subscribe to our newsletter, we will send you a link to our new charting layout. If you're already a subscriber, just look at the new link that's attached there. It will get you the new chart that we have. We also have instructions on how to get these charts from freestockcharts.com. The operative word there, free. Okay, now lastly, we're going to go back to our 2-day chart. We're going to take a look at gold that was up 0.18% for the day. Gold is trying to push through. It's already pushed through the weekly trend line, trying to push through the 2-day trend line. Hasn't managed to do that yet. Keeps looking like it's going to cross over going up on the 2-day chart. Hasn't done that yet, but let's take a look at our magical 4-hour chart. It crossed over going up, and I know we had several of our students buy virtual trades in it. You have made out like bandits, have you not? It has gone up substantially since that low of 119.28, high of 119.74. It peaked at a high of 121.76 just a few short days later. And of course, it ended the day at 121.01. So again, up throughout the course of the day, 0.18%. But again, it's getting really long in the tooth. What is it doing on that 4-hour chart? It's really sliding sideways. So again, be careful. Derivative oscillators losing energy. The PPO is parallel, and it may be crossing over going down soon, or it may not. But hopefully, those of you who were in it had already set your sellout prices and got out at the high of the highs at 121.76, or at least sold some of your positions either on the 19th or on the 25th. And again, what we talk about is when you have a nice bump up and a nice high, sometimes it makes sense to unload about half or all of it. Be happy making money. Don't get greedy and lose everything. Folks, that's where we are at the end of the day on Thursday as we go into Friday, the last day of the week. What will we be doing tomorrow afternoon? We'll be recording our weekly review and forecast and our daily review for Monday. We appreciate you being with us. You have questions, problems, concerns, go to Charting Wealth. Let us hear from you, chartingwealth.com. Also, please, if you want to do us a favor, go to our iTunes channel, our podcast, subscribe, give us a 5-star rating, say something nice about us. You can also go to YouTube and subscribe to our channel. We upload everything for our proprietary subscribers there first, and we so appreciate it. None of that costs you anything, and you really help us out with our metrics. You've made us as high as number 6 in the world as far as stock market podcasts go. So keep help driving those numbers for us. God bless. Take care from chartingwealth.com.